Today, we're diving deep into one of the most polarizing companies on the market, Palantir. This is a company that's both celebrated for its groundbreaking technology and, let's be honest, feared for its power. And right now, it's the center of an absolute tug-of-war between Wall Street's biggest bulls and bears. And that brings us to the real mystery here. Palantir's CEO just came out and announced their best quarter in history, with growth numbers that are just genuinely off the charts. So what gives? Why is the stock still down so much from its all-time high? What is the market so nervous about? That's what we're going to unpack today. Is this a generational buying opportunity, or is it a massive red flag? All right, here's how we're going to do it. First, we'll look at the Palantir paradox and this SaaS-pocalypse that's rattling the entire tech industry. Then, we'll actually break down their business model in simple terms. After that, we'll get into the Q4 numbers, which tell a fascinating story. We'll lay out the bull case, then the bear case, and finally, we'll land on a verdict for what to watch for next. Let's dive in. So first things first, you really can't understand where Palantir is today without understanding the massive storm it's sailing through. In early 2026, the entire software-as-a-service world got hit by a shockwave so big that the media started calling it the SaaS apocalypse. It was a total perfect storm. It all kicked off when OpenAI made a huge push into the enterprise space. Then, Palantir's own CEO, Alex Karp, basically threw gasoline on the fire, publicly declaring that AI was about to make a lot of software companies obsolete. And the final punch? The big guys, Amazon, Microsoft, Google, they pledged almost $500 billion to AI. Investors panicked, they fled from software stocks, and in just about a month, $2 trillion in market value just vanished. And Palantir? Well, it got caught right in the middle of it. So, if the entire software industry is in crisis mode, why do Palantir's biggest fans think it's not only going to survive, but actually come out on top? Well, the answer is in its business model, which is fundamentally different from all those other companies that are suddenly at risk. You see, Palantir doesn't sell you a simple app. It provides what's called a data operating system. The best way to think about it is this. It's not an app on your phone, it's the iOS or Android operating system that lets all the other apps talk to each other. It creates a foundational digital bedrock, pulling together all of a company's messy, siloed data into one single trustworthy source. And then, the powerful AI models, they plug into that foundation to get their work done. And this really shows you the difference. On one side, you've got your typical point SaaS tools. A simple app that does one thing, like scheduling. AI can learn to do that in a heartbeat, which makes that app disposable. But on the other side, you have a system of record, which is what Palantir is. It's the core plumbing where all the crucial data lives. Switching costs are insane, but more importantly, AI needs this system to be smart. So in the age of AI, these systems don't get replaced, they become more valuable than ever. Okay, keeping that in mind, let's look at the actual numbers from that monster Q4 2025 report. And this is where the story gets really, really interesting, because the performance was spectacular, but it was also lopsiding. So the headline number was huge, $1.4 billion in revenue for the quarter, which absolutely crushed Wall Street's estimates. But the real story, the one that tells you everything, is where that money came from. And here it is. This is the tale of two Palantirs. I mean, just look at this. The U.S. commercial business is on fire, up an unbelievable 137% year over year. That's the AI boom happening in real time. But then you look at their international commercial business, it grew just 2%. That huge gap right there is the entire bull versus bear debate in one chart. But when we look ahead, the pipeline looks incredibly healthy. The company is sitting on a backlog, they call it remaining deal value, of $4.4 billion. You can think of this as revenue that's already locked in but just hasn't hit the books yet. It gives them a ton of visibility into the future. And that's not even counting a potential $10 billion deal with the US Army. The point is, the sales engine is absolutely humming. Okay, so let's put on our bull hats for a minute and build the strongest argument for Palantir. Why do investors think this company is on the verge of dominating the next decade? Well, it all starts with this number, 70% year-over-year revenue growth. And you have to remember, this isn't some tiny startup we're talking about. This is a multi-billion-dollar company that's accelerating its growth. I mean, that's almost unheard of at this scale. And it's exactly the kind of hypergrowth that bulls are willing to pay a huge premium for. And we're not talking about a bunch of small contracts either. In the last 3 months of the year alone, Palantir signed 180 new deals worth at least $1 million each. And get this, over 60 of those were worth more than $10 million. It just goes to show they are landing huge transformational contracts with major companies, and they're doing it over and over again. And finally, you have the government moat. Palantir isn't just another contractor. It's literally woven into the fabric of Western defense and intelligence. We're talking about critical programs like Project Maven for the military, the Titan battlefield system for the Army, even helping the IRS catch tax fraud. These aren't subscriptions you just decide to cancel one day. These are deep, sticky, multi-decade partnerships that are almost impossible to replace. But of course, for every bull, there's a bear with some really serious points. So let's flip the coin and look at the argument for why you should be very, very careful here. It really all boils down to two things: price and perception. This right here is the number that keeps the bears up at night. Palantir is trading at a price-to-sales ratio of around 77. For comparison, the median for the entire software industry is about 3. That's over 2,000% higher. A valuation like this doesn't just assume success, it assumes absolute perfection for years to come. One misstep, one single bad quarter, and the stock could get crushed. And hey, don't just take it from me. Look at what Wall Street professionals are saying. Even with all that incredible growth we just saw, the vast majority of analysts have the stock rated as either a hold or an outright sell. Their average price target is actually way below where the stock is trading now, which tells you that the people who do this for a living think it has gotten way ahead of itself. And finally, there's the perception issue. This quote from a Reddit user, while pretty blunt, kind of sums it up. Now, whether you think it's fair or not, the reality is that Palantir's work in surveillance and defense makes it deeply controversial. For an investor, this creates something called headline risk, where a single negative news story can tank the stock, no matter how good the company's financials actually are. So there you have it. You have the bull case, a generational AI giant with an unbeatable moat. And you have the bear case, a dangerously overvalued and controversial stock. So where does that leave us? Well, the next big event is their Q1 earnings report coming up on May 11th. And here's exactly what you need to look for. Number 1, U.S. commercial growth. Can it stay above that 100% year-over-year mark? The whole bull story hinges on that. And number 2, new bookings, or total contract value. They need to bring in over $1 billion in new deals to prove that this amazing momentum is still going strong. And that really leaves us with the million-dollar question for anyone looking at Palantir. Is this company building the essential operating system for the entire AI economy, which would make it a bargain even at this price? Or is the stock just a story of a fantastic future that's already been fully and maybe even overly priced in today? The answer to that is probably going to be one of the biggest investment stories for years to come.